I think we're still in the foothills of a transformation that's probably going to take 5, 7, or 10 years, but we're already seeing the adoption of AI much faster than we saw, for example, the adoption of the internet.
Welcome to AI Factor, coming to you from the NASDAQ market site. Today we're sitting down with Alexandra Mousavizadeh, CEO of Evident AI, to talk about how AI is being integrated into the banking sector. Thanks for being here, Alexandra.
Excited to be here with you.
Banks are not really known for being the most innovative or creative institutions. Tell me a little bit about how they're embracing AI.
They're big organizations with a lot of very fragmented and a lot of legacy data, for example, that needs to be dealt with in order to adopt AI smoothly. But if I take a step back for a second and explain what we do with the index, we measure the 50 largest banks in North America and Europe on their AI adoption, on their AI capabilities, and essentially how they translate that into return on investment that then hits the bottom line for the banks. AI is absolutely essential, and hence there's demand for this index. It's essential to stay at the forefront of the sector. It is essential in order to deliver better services for your customers and to try and cut the costs internally in the bank. So we've seen that these large banks have gone out and made AI definitely a priority, and in some cases also considered themselves as a tech company over being a bank. And what that means then, it translates into a lot of changes that the banks are making. And actually now we're seeing a lot of the banks being very creative about thinking through how these new technologies are going to change, not just how they operate internally, but also what they're able to offer externally to their clients.
JPMorgan Chase CEO Jamie Dimon said it has the transformational potential to be something like the printing press or even the internet. Do you see that being the case, or do you think that that is more wishful thinking on his part?
I think he's absolutely right. I think Jamie Dimon saw this early as one of the few CEOs of banks back in 2018, identified this as absolutely crucial, existential, and transformative. He was thinking about how to transform the bank to be something more akin to a big tech company. And to the question around whether I think it is going to be transformative, I absolutely do. I think we're still in the foothills of a transformation that's probably going to take 5, 7, or 10 years, but we're already seeing the adoption of AI much faster than we saw, for example, the adoption of the internet back many years ago.
Evidence Index, as you mentioned, ranks the 50 largest banks on their AI integration, and the latest iteration of this index put Capital One and JPMorgan again at the top of the list. What sets them apart from the other banks?
JPMorgan number one, Capital One is in the second place, again for the third iteration of the index. We have been running this index for 2 years now, and as you mentioned, they are still the leading banks. In fact, the top 4 banks retained their position for the third time in a row. And it's not that anyone has slowed down in the top of the rankings. On the contrary, they are actually accelerating at a pace that is 2x the rest of the banks in the index. So the leading banks in the index, and JPMorgan and Capital One are the top leaders, are doubling down their efforts, and that means that they're hiring more aggressively. They are pulling every innovation lever that in the bank, like research and patents, and partners with hyperscalers, and going through and using lots of vendors to accelerate that AI implementation. They're very clear in terms of what they're doing, sort of also in terms of how they communicate what they're doing and how it's expected to hit the bottom line. And they're very strong on also the transparency of the responsible AI. So essentially what the characteristics are of those leading banks, JPMorgan and Capital One, is that they're not slowing down, they're actually picking up pace. And also we're starting to see that this will start to have an impact on the bottom line. Jamie Dimon has expressed that this year they're going to see a return on investment of about $2 billion on their AI efforts. They're one of the few banks that actually articulate what that means, their investment into AI, what it means in terms of their ROI. That is very much a sign of a mature bank.
Do you expect more banks to post those ROI, those figures starting next year?
I very much do, and I think so. What we've seen this year is very much a year still of transition. So what I expect that we are going to see next year is that more and more use cases are going to be put into production, and then pushing towards the end of 2025 and sort of beginning of 2026, we're going to see real sort of ROI coming through, real value being added to the bottom line of the banks.
And then going back to the index, Morgan Stanley and HSBC entered the top 10 for the first time. What got them there this time?
They doubled down on their AI activities this year. So 2024 very much marked a change in the banks. I'll take HSBC as an example, doubling down on sort of clarifying their AI strategy, more spend towards AI, reorganizing at the senior leadership level, putting in place some more research capabilities, putting in place very much sort of the AI expertise at the heads of the lines of business. So we sort of saw activities at, for example, HSBC in the sort of real, the organizational structure, but really also in sort of doubling down on the AI talent. There's a lot of hiring in AI development, model risk, and AI implementation talent, and that was captured in the index and sort of put them solidly in the top 10 this year, which was great to see, of course.
You previously mentioned this bifurcation between those leading banks and the ones that might be more towards the bottom of the index. Is it too late for them to catch up, or do you think that there's still a lot of room for these bottom performers to work their way up?
I think that what we've seen in the index this year is that bifurcation, i.e. the gap between the leading and the lagging banks, is growing much faster than we anticipated. We knew that bifurcation and the gap between the leading and the lagging banks would grow over time, but what we've really seen is that taking that gap growing much, much faster this year. And so there really are sort of three categories, right? There's the leading banks that are just, doubling down and even more active. They have an advantage from starting really early on, so being able to really harness and capture the changes that are taking place, the acceleration of the technology, so you can onboard that much quicker. They've got their cycle times down, they've got their organizational structure really pointed to being able to adopt AI quickly. Then you've got the banks that are, doubling down now. So in the last year or 2 years, and HSBC and others are really good examples of that, where they've made a decision that we're going to, really get that house in order, be integration ready, looking at what is our program for AI, and looking at how do we touch on all of those components to really strengthen our AI ecosystem to be able to adopt AI, much more quickly than we were before. And then the banks that are sort of what we would call a bit more sort of a wait and see. And I think that there's some advantages to that, because you can look at what the leading bank's doing, you can sort of avoid some of the mistakes that have taken place and some of the experimentation that you can sort of piggyback off. You can also see who are really good partners, which hyperscaler should we partner with, which large language model provider do we think is the most appropriate for the use cases that we have selected. But there is also a time factor here, because one thing is to select who you're going to work with and identify the use cases. That's about 10% of the work. 90% of the work is really reorganizing and restructuring internally as well. And do you have your data infrastructure, is that mature enough? Have you done the work on transitioning and the data into the cloud and organizing a very fragmented data set into a data set that the AI can run on? So that takes time, and that takes a lot of resources as well, and governance structures as well. There's a lot of work in working out how you get that cycle time down with your lines of defense, sort of moving from your first to your second to your third line of defense. How do we compress that time? That takes time to sort out. So I would say that, the longer the banks wait to sort of really get out the gate and put in motion those changes of the sort of structural changes that need to be made, time could be running out. And I do think it is, we're going to see a sort of a slight winner take all here, and sort of in some years it's going to be really difficult to catch up.
So what kind of timeline do you imagine for that?
It's a little hard to say, because there are other factors at play as well, depending on sort of where you are. In some European countries that, there are banks that are sort of very isolated maybe from a lot of competition. But I would say we're looking at maybe 3 to 4 years down the line that it might be quite difficult to sort of catch up.
Great, thank you so much, Alexandra.
My pleasure.
Thanks for watching. I'm Rocio Fabro for Quartz. Stick with QZ.com for more.